Hello guys and welcome back to the channel. This is Talent Trades. So today we are back again with another video, and we have been seeing some crazy moves in the market, or rather we saw some crazy moves in the market yesterday. So today I'm just going to give a breakdown of what happened, what I have been trading, and what I am looking at currently. I'm to trade on the opportunities I'm looking at currently in the markets. If you're new here, welcome. This is Starling Trades. I started this channel as a way of documenting my journey in trading from an unconsistently profitable trader to being a consistently profitable trader, right? So today we're just going to dive right into it. As you can see, we did see the dollar index bust lower here. If you watched the previous video, or if you haven't, we have been seeing dollar sort of consolidate at this support and resistance level. And I said that some oftentimes when you see price consolidating at or near support and resistance zone, usually it tends to break out, right? So we usually see something of the sort. Say we have a support my resistance is on somewhere around here, and then usually start seeing price start to consolidate around here. It's sort of form a tight consolidation around here. Oftentimes it usually means price will break out of that level, right? So if you usually have support and resistance on there, and then you see a consolidation somewhere around there, usually it means a breakout is more likely to happen, right? Works both ways, whether it's in a downtrend or an uptrend, and that is exactly what we saw here with the dollar index. And finally, we did get that break below the around 99.2 level, which had been, a previous level of support and resistance. Again, as you can see, previously this exactly the same thing it had done. Started consolidating around that level and eventually broke out, came back, retested, and then we had that nice rally all the way to 1.5. So we have seen the dollar breakdown, and yeah, let's turn to the fundamentals and see what what was the cause of that. What was the cause of that, right? So there are two aspects here at play. So first and foremost, the macro data has been pushing for a weaker dollar with the possibility of Feds having to maybe hold rates or cut rates, switching from a more hawkish stance maybe now to a more neutral or dovish stance, and it's a result of slowing down economic growth, cooling inflation, and a jobs market that's starting to show signs of weakness, right? Uh, so as you can see, GDP growth has been slowing down. We had a 1.5% growth as opposed to a forecast of 2.1%, which was a letdown of 0.6%. We had services PMIs that also came in cooler than expected, but manufacturing PMIs came in hotter than expected. But I think this was outweighed by by other. Sorry, guys. Sorry for having to clear my throat so much. So, but this was outweighed by other factors, right? So you see consumer confidence as well and retail sales as well coming in softer than expected. We also have inflation, with inflation seemingly cooling, right? Although inflation came in line with expectations at 3.4%, this was a drop, I think, from 3.8%, I believe. PPI also came in softer than expected. And yeah, with the 2-year yield has also been falling significantly. I think I'll show you that when we switch over to the charts, right? As Similarly, we have the jobs market has been showing signs of weakness with negative 23,000 jobs number that came out in the last NFP release, which was a big letdown, right? And I think we'll look at the number and I'll show you how this has been trending lower. We did have unemployment that dropped down from 4.2% to 4.1%, which was more or less a bullish signal. We had jobless claims jobless claims that came in a bit stronger than expected, but both the ADP and the jobs job openings were significantly weaker than expected. Right? And so all the signals point to push uh, push the dollar